All right, good morning, good afternoon, and good evening, wherever you are. I hope you're doing well. It's been a while since I did a live session on YouTube. I've been promising to do this for some time, and I guess today is the day. So, here I am with the live session that I've promised for some time. All right, now let's take a look at the charts and then see what's happening. Let's go over to the dollar index. Let's start with the dollar index. So let me actually get rid of this. Actually, I'll keep it on there, and I'm gonna key off from the forecast that I did on Sunday. If you watch the forecast, I did say I wanted to see the dollar index go down, but I would want to see it trade up to the H4 level that I pointed to here. And then once I see price trade to that level, I will go onto the foreign currencies and I will look for a buy, because dollar is bearish, as you can see. And when the week started, there was a hint that they were going into a pullback. So based on that hint, I identified the level that potentially price is gonna get to, and then obviously reverse because it's bearish, and that level was here. Now on the daily, we had something in here which is a volume imbalance, and I promised also that I'm gonna cover some lessons that I've given in the past and show you how I'm using it on the charts, right? So if you look at the lesson that I titled where or how, I think it's where your high probability trades are going to form. If you watch that lesson, I did talk about kind of creating a discount and premium levels on your chart, or kind of using the fig to identify when price is expensive and when price is cheap. So here is an example, right? This is a swing high, this is a swing low. Price is bearish, so we want price to trade into premium and then continue going down. So price coming up here was just coming to trade to the auto block that I showed you and then resume going lower. So based on that, right, based on the fact that we are bearish, we are retracing, so there is a high probability price is going to continue going down, right? So you have that range. So that's the lesson number one that I want to give you. On a daily time frame, always look for your range that price is trading in within, and then know whether it's going to expand outside the range to the upside or it's going to expand outside the range to the downside. So here, because we have this range here, right, price is definitely going to retrace and then expand outside the range to the downside, and that's what you're seeing here. Okay, so when that happened, right, we go on to the foreign currencies and then we start looking for the opposite, when we start looking for a buy. So if you jump onto the British pound, price was down here, that's the opposite, that's a retracement, and then you're gonna look for the buy. Same thing applies to Aussie. That's the retracement, and then you're gonna look for the buy. And then finally New Zealand, that's the retracement, and then you're gonna look for the buy. Now, one thing that it's not a lesson, but something that you need to pay attention to is the trend on the daily. Try your best not to go against the trend on the daily. The trend on the daily is very important. To me, more even important than the weekly, because institutions trade on a daily basis. So if something is going to change in terms of price action, it will be on the daily time frame. So spend more time on the daily, and then stick with the daily trend. If there is one, stick with the daily trend, because big money, right? They are not gonna just come into the market and stay there for 15 minutes and get out. There are, speculators out there that will do that with big money, but when it comes to, I'll say smart money, they tend to be in the market for some time, and they are always on the side of the trend as well. So if price is going up, they will be willing to keep buying until price change direction. So if it's going up, it might just keep buying and buying and buying until it gets to a certain point. They feel like, okay, this is too high, let's change direction. It's very crucial what I'm saying, and the reason why I'm saying that is it's something that I fought, right, to kind of submit to. On your daily chart, okay, you're gonna see sometimes price is doing something like this, okay, on the daily chart. Where I was having problem with is this move here, because I will see this move as, okay, now we are reversing, you're going to continue going down, and lower time frame will confirm that, and you see price actually dropping. But what you need to remember is where price is coming from, right? It's bullish, so this is just a retracement. So don't get caught into selling this, expecting it to just keep selling, and then obviously eventually price will go back up and then take you out. And that's what I did struggle with. So I pay so much attention to the daily time frame, and looking for always the continuation until I get it wrong, and it's like there's no doubt that you're wrong. Then you kind of switch and then say, okay, now price has taken out this low after taking out this high, so now I'll be looking to sell. All right, but initially always go with the trend on the daily time frame, regardless of what you think your analysis is going to do. Make sure that you stick with the trend on the daily. It's gonna make you a better trader. It's gonna give you clarity. Your confusion is because you have some ideas in your mind, and those ideas might not be playing out as you want it to. But it doesn't matter your idea. If price is not going to do it, it's not going to do it, right? So follow the trend on the daily, and most of your trading issues might be solved. Okay, so moving on. So this would be like, for example, a typical trend where this coming down, you should see it as a retracement into that range. Not so much of a retracement, makes a new high. You should see this as a retracement into that range for a continuation to the upside, and not being in the lower time frame and thinking, okay, now we've reversed, so price should go down. Okay, so looking at the New Zealand, I'm not going to talk about obviously targets here, how to get your targets, but you can clearly see that's a potential level that price will trade to, and I think I gave that over the course of last forecast that I did. Okay, Aussie, they have reached the bearish order block, but I still think it can go higher. So this is not it. So again, this is where paying attention to the daily comes in, right? If it comes back down, don't look at it as, okay, it's gonna go down. No, you have to look at it as, now price is retracing. How do I get in to continue to the upside? Okay, because if you try to, okay, we've hit a bearish order block, I'm going to sell. If the market is really not prepared to sell, which is there's no breaking market structure, you just want to sell because price hit the bearish order block, that will be a very painful experience, because when it does eventually stop you out, you're gonna get confused because it hit a bearish order block and it should have gone down and it didn't. Okay, so see this as, okay, it's just a speed bump. It's gonna retrace and it's gonna continue going up again. All right, we've talked about New Zealand. Crude oil, at the beginning of the week, I anticipated them going here, and that's what they did. And then Tuesday, I got confirmation that price wants to come up here, and you can see since then price is heading towards that level. So I believe that oil is going to trade up to this level. So pulling back, or whatever pullback that happens, you should absolutely think bullish instead of thinking bearish. Okay, so that is that for the euro pound. I'm sorry, the crude oil. I was looking at euro pound. This is EJ. Now EJ is a very interesting one because yesterday I was looking at it, and I had this, the chart was looking exactly as you can see it now, and I had this level mapped out, and I was expecting either for them to sell off here and down, or come up here and down, and lo and behold, they just hit the first one and then I just dropped. I managed to get in on here. So after this drop happened, I placed the sell limit, and I wanted to see how price is going to behave. So the sell limit was just the low of this box with a stop above, looking for price to go and attack that low, and that's exactly what it did, right? If you did watch the forecast, I did show you what I'm looking for, right? Now there is going to be, if you do watch the forecast that I do, there's going to be a gap, okay? And the gap is between when I give the forecast until the market opens. Maybe something will change, and obviously it not being in the forecast, you might not be able to anticipate it, or when the market opens during the course of the week, the sentiment might change and also might cause price to change, and sometimes that can also lead to you being confused in terms of, again, if you do watch my forecast, right? So don't worry too much for now, because I'm not doing live sessions every single day. But if I was doing live sessions every single day, obviously I will guide you through how you can know if the sentiment has changed or not. But you're not part of, if you are not part of my private group, you can still trade, just have what I have described here. Okay, anytime price creates a range, just have that, and then look to sell or buy within the you're buying or selling within that box. So if you're a seller, you should sell in that box. If you're a buyer, you should buy in that box. Okay, if you watch my forecast and you have an idea of buying or selling what I described in the forecast, the best solution is to use this box here, right? Divide your charts or your dealing range that price is currently trading in, divide it into two, and then find where premium is, and then that's where you want to be selling. So if price goes into premium, your job is to look for an order block, run-on stops, or fair value gap in premium, and then you use that to participate in the trade in the direction of the forecast that I've given. Okay, so here, if you did watch the forecast, I said I wanted to see them go up here and then send it to attack this low. Monday opened and we rallied, so I was looking for that, and then all of a sudden rejection. So yesterday I did identify this 1 hour bearish order block, and then time of the day we hit it, and then we're down here. Okay, so it's a good in my opinion, it's a good thing to follow the forecast and then use things like this to help you get in sync with where the market is going, right? So that's that lesson, where high probability trades are going to form. Always structure your chart. I call it structuring your chart. Structure your chart in a way that you know where you're gonna be doing buying, and you know where you're gonna be doing your selling, and anything in between you're not interested. So if price is trading into premium, you want to identify a premium level, and then you want to sell short there. If price is trading to a discount and the market is bullish, you find a discount level, i.e. bullish order block, fair value gap, run-on stops, and then you buy. Because if it does happen in discount and price is bullish, you're going to see feedback immediately, and then price will move. Okay, and that's what you're seeing here. There's another example that I did on Euro Pound, which I'm going to show you here. Same thing, right? If you divide this chart into two, and then you have your premium and discount, okay, that's your premium and discount. Now if you look closely, what will be the premium level that you can sell short at? That is in the red. The red area is the premium, the green area is the discount. If you look at it, right, where will be the right level to sell short with this on your chart? Now if you don't have it on your chart, there's nothing wrong with it. You just need to understand that this is an impulse leg and this is a bearish order block, so you can measure this high to that low, find 50%. Anything above it will be considered premium. Anything below it will be considered discount. So if price is going down and then you see price going back up, that is a chance of you getting a sell to continue. So you can use this to make life easier. So at least you've got it. You've got the idea of what you're trying to do in a picture form, that you're only going to be interested in selling if price trades up here. Okay, so that is that for euro pound. You can see they're going to attack this low. I think they will attack these lows as well, and then maybe trade into this imbalance. Another trade that I took, this one here, the same idea. Okay, so I'm hinting more on where high probability trades are going to form. Okay, so let's do that again. As your premium and discount, you find where your discount level is, i.e. an auto block, fair value gap, random stops, because this could have easily gone down here and taken out that low and will still be valid to go up, right? So this was just a pullback into discount, find the auto block, and then off it went. And I purposely told you this week that I'm looking at this pairs because dollar index might give me a consolidation, so I wouldn't be interested in trading the majors, but I'll be interested in trading these crosses. And I gave you the specific levels that they were going to trade to. You can see one here and then one there. Okay, so I'm long since yesterday when price traded down here. I have 2 entries. I'm not trying to be greedy. I just entered one with less risk, and then I entered the other one with less risk. So combining both of them gives me my normal risk. So I bought 2 to continue going up. Another pair. Structure your charts. Right there. Okay, so you can see that this one failed to get to discount. So if you were trying to buy in terms of we being bullish, then this one wouldn't have given you an entry because it did not trade into discount. So you're gonna discard that. You don't force trades with the knowledge that you have. It's much easier to see what you're looking for and then actually engage. So for example, this one, I would want to see it trade below the 50% for a potential buy to continue going up, but it didn't. Okay, so I used other things to get into this one, which I'm not going to go into details because it's going to be a very long conversation. Okay, but the long and short of the story is learn to divide your chart. Learn to structure your chart so that it will be much easier when you know, or probably sometimes you might not be aware you are, I won't say backsliding, but you are moving away from what you're actually doing. All right. So if you don't get an entry, no problem. If you do, great, you go with it. But don't force it. Because if you do force it, there's only one thing that can happen, which is you're going to break because you are forcing it. So I got an entry where I'm not going to discuss, but you would have wanted to see price come down here and then look for a buy to continue going up. Euro New Zealand is another pair that I've been screaming that price is going to reach for this imbalance, and this was way back up here. Okay, way back up here, and 1 month later this is where we are at now. Now if you've been following along, or if you've been following me for a while, you should know this level. Right, you should know about this level. That's what I've been looking for price to draw to. Now, do I have an entry on this? The answer is no. Unfortunately, I cannot trade everything, so I trade what I see in the moment. Right, so I actually had a reason to sell short this morning. I just decided not to sell short here. Okay, that was a sell right there this morning to go exactly here. But I cannot trade all of these. I have admitted to my group that, one of my struggles is limiting the number of pairs that I actually look at. The more pairs you look at, the more trades you're gonna take, especially if you're a bit experienced. But if you want to become a master, what you need to do is what you know, apply it on something very small. So not too many pairs, maybe 2, maybe 3, but not anything more than 3. Because if you start doing anything more than 3, your attention span will be loose. You cannot focus on one pair. You're gonna look at this pair, it's not gonna give you what you're looking for. You're gonna change it to another pair, and you're gonna see something that might look like it's a trade, but then it's not. You take it, it's a loss. But then all this while you know how your setup is, you know what to do. But you going on to trade so many pairs, maybe that time that you took that trade on that pair, that's the time that the pattern that you're using is wrong. All right. So hence I did not participate in this. But if you don't have any trade going, that's the potential. I think it's gonna reach for this. And then on the H4, something happening here. Something happening here, and price went down. So you can look for, I think, maybe New York session pullback, and then look for continuation to the downside. Okay. Now, what can I show you in terms of the things that I have shared in the things that I've shared on YouTube already? Let's apply the H4 close on this one. So go back to the daily and then draw a line on previous day's lows. Okay, something like that. All right, those are all previous day's lows. And then look at the H4. So this is Monday. This is Monday. That's Monday's low. I have too many lines on my chart. Let me get rid of some of them so it's much easier. So this is Monday. That's Monday's low. You can see we closed below it on the H4 basis. What does that tell you? It tells you that price will potentially continue going down. We go back to the daily and price it eventually go down. And then we take this one and go to the H4. That's that low there. We close below it on a H4 basis. What does price do? Price end up being bearish. Today, that's yesterday's low. We've gone below that. So what would you expect? Today to close bearish. Okay. It doesn't give you an entry, but it gives you some sort of confirmation of what price is potentially going to do the next day. So if you're doing it, like for example today, it can give you the data to know what potentially is not affirmative, it's not 100% guarantee, but it gives you a high probability of price going down because of the close. All right, so that's one way of using the H4 close. Now if you want it very close to price, then yes, this is the closest to price, where we actually close below the daily low and on the H4 basis, and then subsequently price went down. Okay, so yes, you can apply that on anything. Let's put back to the daily and then show you where price is reaching for. Now one of the most important thing in trading, especially the way we trade with ICT, is knowing where the market is going. Right? One of the most important thing is knowing where the market is going, because once you know where the market is going, it's game over. Okay, once you know where the market is going, it's game over. The rest is going to be, how do I get in? But how you get in, no one cares, because at the end of the day, you know what it's trying to do, which is if it's trying to go up or down. Where you get in to get to where it's going, you don't have to even worry about that. All you need to do is know where it's going, and then maybe like right now, if I want to take a trade, I'll go to Euro New Zealand, I hit sell. Why? Because I know it's going to drop down. Okay, it's going to drop down, so I'll hit a sell, and I'll just take my chances. Okay, I got a question. Which H4 candle holds more for this to be true? Okay, so I think in the lesson that I did, I talked about the famous lesson ICT did that it kind of made sense to me. Okay, now the reason why I say it makes sense to me is because if you look at it from a logical standpoint, it does make sense, and that is if price breaks market structure, and it's indeed a break, it should be obvious to you that the market really wants to continue going down or up. In this case, it's the size of the candle. Okay, you can call it abnormal candle, but it's the size of the candle that gives it away. Okay, so the best ones are going to be the ones with something like this big candle, not all of these, but this particular one here, or this particular one here. If it goes below a previous day's low and you are bearish, that could be the beginning signs of, okay, price is eventually going to continue going down. Okay, so the time is, yes, 10 GMT. Once we hit 10 GMT, put your charts on the H4, look at the trend, and then that's all you need. I'm going to repeat that. And I forgot what I said. All you need is knowing where price is going, which is your trend. Wait for time, which would be a kill zone, and then know where it's trying to reach for, which is another price level, and then that's all you need. All right. So I've covered all of these. Aussie CAD is another pair that I liked, but it has hit my TP, so I've closed my trade and I've moved to the sidelines. I think New Zealand will still continue being bullish, so I'm still in the New Zealand. I want to see price go up here, so I'm still riding the New Zealand CAD. right? Let's go to let's go to Nasdaq, because this was absolutely fantastic yesterday, even though I did not participate in it. But it was a fantastic move because at the time we were having a live session, and I talked about this pair going up, and the reason why I mentioned that it was going to go up was because they've just taken out a previous week low over here, as you can see. So that's a previous week low, and as soon as they took it, price did not spend maybe 10 hours, and then it just shot up like that. Was it predictable? Very predictable. Maybe entry wise, no, but it's something that is predictable. Now, how did I predict that the how do I predict that the market was going to go up? The answer is you have to look at the higher time frame. Okay, if you looked at it from a weekly standpoint, you will see that we are trading above this down candle, which is an auto block. Okay, so price is not gonna go down. And since we had, if I zoom in, a weekly low, what is going to be below a weekly low is going to be BAIS. So they tap into that whilst we are bullish, and then just shoot up. Okay, so that's how I got to know, based on the fact that we are bullish, we traded above a down candle here on the weekly, and this is just what pulling back inside the weekly, and then you see price expand up again. There are so many concepts that we use to identify the draw on liquidity, which has been, I think, one of the things that I spend a lot of time on. The reason why I did spend a lot of time on is because that's the only way out. If you know what the market is trying to do, you can execute. So it doesn't matter what you trade, it doesn't matter what you look at, as long as you can sit down and analyze the chart from a logical standpoint of seeing something over and over and over again, you can start trading it with confidence. Okay, so weekly rate, we're bullish inside a bullish auto block. We hit it, take our previous week low, and then expansion. We will look for it to trade up here, and then there's a level in here that price might trade to. Okay, question: if a H4 candle closes above a previous day's high and price is bullish, I missed that. I missed what you said. Okay, let me process that information for a moment. If H4 candle closes above a previous day's high, it means it's bullish. It's going to continue going up. Good morning. So that's why NAS went up. Obviously S&P did the same thing. This is what I was talking about earlier, right? Structuring your chart into premium and discount. Oop, not that one. This one. Okay. Once you structure the chart, premium and discount, up it went. You're gonna find the discount level down here that led price up, and then US 30 did the same thing. Premium and discount, and then off it went. Okay, So that's pretty much the analysis or the forecast that I gave, and almost all of them, they're doing what I anticipated. Even if you look at the crypto market, that level that I gave, weekly high, previous week high, that's exactly where price went. Same thing with this one. Okay, now I know we do have some of our group members in here, so all that I'm saying, they know, they understand. Some of the things, maybe if you're new, you might not understand it, but I know pretty much most of you do understand me or what I'm trying to talk about here, because we talk about it every day, right? So I think they're gonna continue going up, in my opinion. They might take it up here for Ethereum. So you can structure your chart again based on let's use the fib. It's actually the fib. You can do something like this, and then if it drops down into discount, just buy it to continue going up. You don't have to feel like price is going to go down. Again, something that I borrowed from ICT: refrain from calling highs, right? You don't have enough money to put a high in the market or put a low in the market. So refrain from trying to call the high, because what you might be calling a high might not be a high but a reaccumulation for price continuation, or what you might be calling a low might not be a low, right? When that happens, sometimes psychologically it can hurt you. So make sure that yeah, I guess pretty much I've gone through all the pairs that I did give the forecast. Before I move on, I want to ask if anyone got any question. I know you guys have sent me a few questions, but I've gone through all the pairs, so I'm asking now if you have any question before I move on to the second phase, which will be showing you what I promised in the video description. We've actually looked at the daily close or the daily BAIS. We will look at the other two, and then if we do have time, I'll talk about the Tuesday and Thursday price action. So before I move on, anyone got any question? Okay, no question. So let's move on to the next part of the of what I said I was going to give you in terms of understanding the closing price. Okay, the closing price of every single day is important. The reason why it's important is once the day closes, right, the low that has been left in the market, on your higher time frame, they can lead to a reversal, they can lead to a continuation, and they can lead to consolidation. Now, if you think about a trend is price going in a specific direction, right? So if we do have, and if you think about it, if we do have a swing like this, that's a swing low, and then price trades through that. When I say through, it means when it does something like this. This is a sign of pure bearishness, that the market is indeed bearish because we've just gone aggressive below a swing low. So if you understand that, then there is an element of price that is so strong inside this range here, or this small picture that I've done. There's an element here that is important, and the reason why it's important is because this candle might reference that, and then maybe, let's say, give this pattern here, or this small little price action here, it might refer back to this, because obviously we all believe that the market is 100% controlled, and we understand IPTA, right? Or whatever mechanism that runs the market, we kind of have an idea, and that mechanism should by default have some parameters, right? Because it's impossible to create something, especially when it comes to computer stuff. If you're a programmer, you understand, you can't create something without having I'll call it sometimes variables, because you have to at some point refer back to something for you to be able to know where you are going. So for example, if price makes this move here, it can refer back to this particular candle because that was the lowest candle, and then price traded through it. So it can look back and reference this candle, and then price might trade back to this candle's low and then go down. Okay, so the closing price is important because if, for example, this is a H4 swing low, that H4 swing low is also part of a daily time frame. It could be a daily up candle, it could be a daily down candle. So the closing price of that daily might be here, or not might be, is here, but there could be this price action. Okay, it could be this price action, because if you think about what this low is, it's a day, so there's 24 hours. If you put on the H4, most of the time you will see a swing low. Okay, something like this, you will see a swing low. So if price trades aggressively below that, then price is going to continue going down. But most importantly, the reference point will be on, if this is the daily close candle, this would be the, let's say, the closing price on the daily, but on the H4 it will be a swing low. So once price trades through that level right there might become very sensitive for the daily, because we just broke in structure to continue the trend. Okay, you just broke in structure to continue the trend. Hence, if you reference the closing price and then see what happens around that, it can give you a clue. So the way I use it mostly is on the weekly chart, because I want to see how we are starting the week and what I can do in terms of my weekly trades. So the weekly closing price is important to me. If, let's say, by Monday, for whatever reason, price trades above it, that's done. Price is going to go up, because I'm using it on the weekly, not on the daily. So pay attention. If I see this, that price trades through this low and then comes right back above this, the only thing that you will do is basically look for a buy, because if you sell it algorithmically, this is gonna maybe trade up here or trade and take out this high. Okay, so it's something that if you have it on your chart and you reference it and you know how to apply it, it can give you heads up very quick in the market. And sometimes you can even get a trade idea, because once they trade through that, that level becomes very sensitive. Okay, so when the way I use it is mostly on the weekly, right? But on the daily, you can also apply it on a day by day basis by looking at, okay, once the market close, where is my closing price? And then I want to see quote unquote expansion or speed or displacement above or below the closing price. So if this is your closing price as an example, and we closed bearish, let's say this is the closing price. If we are bearish, what I would look for is the market to open, trade up, and then aggressively take out the Asian the opening price of that candle, not this one, the next one, and then I can confidently look to sell short. Because once they trade aggressive through the opening price the next day, there's a high probability, very high probability, price is gonna end up being bearish. And then vice versa is true for what for the sell, because what I'm showing you is the buy, so the opposite will be the sell. And it's the same thing. If price closes bullish, you highlight the closing price and you see what price gives you around that. If they trade aggressively below the the closing price on an up candle, that is a huge sign that price is gonna do what? Price is gonna go down. Okay. Let's see some examples. I'm gonna take you to my New Zealand BAIS. Okay, so let's start from down here. So that'll be the closing price. Okay, let me use the magnet too. There you go. And then we're gonna drop down to the daily. That's the closing price, right? We trade aggressively above it here. And then you can see what happened next. Price never looked back. So that gives you heads up. Now imagine if this was on a 1 hour chart. You don't have to wait for market structures to break. If the context is right, because you have to use it in the right context. If the context is right, you don't have to wait for market structure break to be a buy. You can be a buy here. You can be a buy here. As long as we trade and close aggressively above the closing price, that's the tip. That's all you're looking for. Okay, so I just use this one to demonstrate to you on the weekly, but it's the same idea if you're using the daily. The reason why I like the weekly is because I'm not the the quick in making decisions, right? So I take my time and I make decisions. Hence, this time frame makes sense to me. That's why I'm showing you on this time frame. Once it trades aggressively above the closing price or trades aggressively below the closing price, that's its game. Let me show you another example. For example, today on my GCAD trade, if you go back, let me actually go back and then highlight the closing price. Okay, so that's the closing price on GCAD. Let me actually remove all this first. right? Yesterday, that's where price closed. So if I'm looking to buy, how can I get in? Well, look for the aggressive close above the closing price, which will be here. Why these two? Because this is the day we closed and we closed below it. This time period is still what the is still trading because the day has not ended. The day actually ends at 9:55, which will be inside this candle. So the only time price close aggressive above it is here. Okay, so once we did close, look where we are now. But if you didn't have this understanding, how do you trade it? You can just wait for breaking market structure and then you trade it. But if you apply what I'm showing you here, you will get a heads up early. And sometimes you can even know as soon as that price opens and it starts behaving in a certain way, you know that reversals are coming. Okay, as in, once you start seeing this over and over and over again, you will see some sort of pattern that will emerge around that same price level, and then that's what you're gonna do. Okay, let me show you another example. I think New Zealand CAD is not that great as an example because it's just too bullish and it's so obvious. Let's look at something that's not obvious. Okay, let's go to the daily. Right, let me use the Euro Yen. Okay, so that's the closing price, right? Let's take this one off. We closed like that. So this is how the chart looks like when I'm going into trading Monday. What we want to see an aggressive close below this price level. Is that aggressive enough? Yes. So what's going to happen? It's going to continue going down. Why? Because price has confirmed it. And then what price did was pull back, and then down we went again. If you want to use on a daily basis, right, you're going to do the same thing over here. And then you look at in here, you will see I am doing it so I can see it from the daily time frame. But what you can do is just put on the 1 hour time frame and then you see the aggressive close below it, or an important candle going below it, which would be here. And then subsequently we went down. Right, let's go back to daily. You can do that same thing over here. What's the closing price? Okay, write it down, and then you go in hunting for a 1 hour rejection to close below that aggressively, and then you sell. Okay, so the closing price is very important, as well as the low or high. The low and high, I'll try and record that separately as a lesson, and then I'll put that on here for you guys. At the same time, gas, if you look at the not the closing price, the low, high, open, it all gives you so much information that if you just pay attention, okay, one lesson that I gleaned a lot from is on ICT's website. or ICT's YouTube. He titled it The Opening Price. Go and watch that. Okay, that's where I got so much information from. If you watch ICT talk about the opening price. Now you have the opening price with ICT, what you can do with it. You have the closing price with me, what you can do with it. The high and the low, that one is a secret. I'm not gonna talk about it here. That's what we use in our camp, so I'm not gonna talk about that here. But the opening and the closing price, you can watch the closing here as I'm showing you. Watch the opening price on ICT's YouTube, and then we'll keep the high and low. Okay, so open, high, low, close. That's all you need, and that's all you ever need. Right? So one more example and then we move on. Which one should I use? Dollar index. Let's use dollar index. And let's use this closing price over here. Right? We went above it and then boom, aggressively go back below it. So if my bias is bearish, this is something I'm looking for. Because once I see that, it's a confirmation to me that it's time to sell. Because price has traded through, or there's a huge candle, ICT calls it speed. That's where I borrowed the word from. There's speed below, or that runs through the closing price, which is this candle here. So that confirms that price is going to go down. Okay. There's another example over here for the up day. It did actually close aggressive above the closing price. Let me go to the daily. Here. Say we closed above it here. Here we did close above it just by a little, and the price went and then closed for the day. Right? I can show you lots and lots and lots of examples, but it won't help you than you going in and then looking for what I'm showing you. Right? Just go to the daily time frame, find a high or low, the closing and the opening, and then stick a line on the closing. So if we close up, stick it on the close. If you close down, stick it on the close, and then see the reaction that you will find around that price, and then begin to draw your own conclusions. Okay, that's the only way you can learn this. You cannot turn it into a strategy today. It's not going to work. So the only way it will work for you is you going into the chart and then seeing examples for yourself, what I've just shown you here. All right, so I've talked about three things. I combined the high probability areas and then daily bias to update you on the forecast, and then I've just used the few minutes gone to talk about the closing price. Now, the new lesson for today, please go back. Where do you want me to go to? Where do you want me to go to? Tell me where you want me to go to. I'm waiting for you. Tell me where you want me to go to. He said go back. I don't know where back. Oh, before the drop in. Okay. before this drop here, or before this one. That one, yes, price did not go above it. So again, I cannot go into too much details over here, but that would be a day that price did not trade above the closing price and then closing back down. Because what you're going to find out most of the time, price will go above the closing price and then it will come back down below it. So it's like when you're doing this, right, try to think algorithmically. Okay, what will cause price to change direction? Think about it. What will cause price to change direction? Obviously, at some point, price was going up and then price went down. So if you think, right, if this is where price closed and this is done by hindsight, right? If this is where price closed and the next day you see price down here, what is the sign or what is something that is consistently repeating that you can see that is giving you an idea that price was going down? And that's what I'm showing you. If this is the closing price and price wants to go down, it will have to trade through this level, right? It's a signature, right? Or it's like a hint. So the very first candle that closes below it, that is your straight away, it's like your cue. It gives you the hint that, okay, now I'm bearish. If it goes back up, I'm going to look to sell. Obviously, you have to blend a few things with it. Let's say, for example, price trades to a bearish order block on the weekly time frame, right? And you are anticipating price to drop. That can be something that you can use to kind of anticipate that price is going to drop. So if we trade to this level, actually, let me just show you examples so you can understand. For example, here, right? If you've been following the forecast, somewhere down here, oops, I hate this thing. All right, for example, here, right? For that week, I said I wanted to see price go back up. So how did it start? How did I know price was gonna go back up? That is where you can apply this, right? So for example, here, that'll be the closing price, right? Or here, that'll be the closing price. So if I'm looking for price to go up and price closed bearish, what will give me a sign that price is going up? Well, let me place it properly, right? And I'm gonna drop down. I'm gonna drop down to the 1 hour time frame. Okay, so this would be the closing price and this would be Thursday, right? If you see this right here, if you see this right here above, what would that give you? Because this is the day, this is Wednesday, this is how the day ended, right? And the 9 o'clock candle is here, or the 10 o'clock candle is here. So that's the closing price right there. So once we have this, it gives you what? A confirmation that price is going up. Location, okay? When I say location, this would be your dealing range on the daily time frame, and then price trades down here. What can give you an idea that price is going up? You can apply this, okay? And then once price trades through the closing price on the last down candle, you're looking for price to go up. Let's go to this week as a matter of fact. Let's go to this week and look at Aussie. Let's go to the daily here. And so let's look at the closing price there. This is a dealing range, or this is your premium and discount. Okay, and we are bullish. We are expecting dollar to go down. So how will I know price is gonna go up from here? Because that's something I gave to my group yesterday, that price was gonna go and attack this high. Yesterday here, I told them price was gonna go attack this high. Right? How did I know? Well, let me take that one off right there. We are bullish. Price has traded to discount. If I drop down to the 1 hour, that's the closing price there, and price has gone back above it. Now I'm gonna give you one more hint, right? It's much stronger. Okay, you need to write this down. It's much stronger if we trade above the closing price and then trade back. Sorry, if we trade below the closing price and then we trade back aggressive above it. I've given you something that you're supposed to find out yourself. Okay, it's much stronger if it goes, say this is the day, right, and this is the closing price. It's much stronger if we trade here and then go down above, go up go up aggressive above it. Okay, it serves you no purpose if price does not trade below. Then on the next day candle, say this is, let's say today's what, today's Thursday, right? So Friday trading has to trade below it. If it trades below this low, that's fine, fantastic. If it doesn't, it's okay, but you want it to trade at least, say this is where it closes and then we open the new candle. You want it to trade at least a bit lower and then go up above it. Okay, like here, this is a typical example. Reason why I was bullish on Aussie yesterday, because what that will do is that this will be essentially the low of the day, and price will go up to make up the high of the day. And again, like I said, if it takes out this low, that will be a raid on the previous day's low. So if it closes up above the closing price, you have a very wicked trade to unfold. Right, I've given you more than I should, so I'll leave the rest to you to go and do a little bit of back testing. But the key point on this one is that it has to trade a little bit lower when the closing price is established. So at 10 o'clock, which is my time, that's when my daily candle closes. Between 10 and the next day, which would be another 10, if we don't trade below the closing price before coming up, that is not high probability. Okay, so sometimes you see a candle like this and then the next one opens and it goes up. This is not high probability. Why? Because we could come back down here and take out this low. This becomes low resistance, so we could come back down and attack that low easily. But if it trades below the closing price and it comes up and it closes, there's a high probability that it's not gonna come back down there. Okay, again, hint for free. So that was my reasoning for paying attention to this pair yesterday. I didn't tell my members this, right? I didn't tell them exactly this, but they know. We used other methods to establish that, but this very thing that I showed you, I didn't tell them, but they know. Some of them are here, so they know. Now, that was one of the reasons why I was bullish on Aussie to continue going up to attack the previous day's high. There's something in price that if you just pay attention, it's gonna give it to you. You just don't pay attention enough. If you look at the candles, right, they are enough to give you a lot of information just by looking at, again, the open, high, low, and close. Okay, think about it algorithmically. If price wants to go down, right, and we close bearish, price continues to go down, right? So then think about it. Before it actually goes down, don't you think it goes through some processes before it goes down? So your confirmations that price was going to go down will come early. So then you look for those confirmations, and that can be what you look for in price before you execute. Okay, that can be what you look for in price before you execute. Because if, let's say, for example, a swing low, take a swing low as an example, right? If you look at the open, sorry, the high, the open, the low, and the close, the high, the open, the low, and the close, the high, the open is down here, the low, and the close, right? Look at it from a algorithmic standpoint, right? And think, if you were to move price, okay, what would give you a confirmation that price is going to go up? Well, there was a close here, there was a close here, there was a high here, there was a high here, there was a low here, there was a low here, but this low, right, couldn't go below this low, and the opening price has been traded the closing price over here has been traded through, and we've gone above this high, right? So from an algorithmic standpoint, don't break. From algorithmic standpoint, right, it gives you an understanding that, look, something different is happening here, right? Something different is happening here. It's not the normal prices going down, 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 down. Something has changed. Now, if you apply it on a fractal basis, so you think about it from a H1, H4, daily, weekly, monthly, and then cut this one off, and then look at it from this point, algorithmically, look at it from this point. Don't you think it can give you all the clues that you need to trade? It surely will, because if this is a full day, this is a full day, this is a full day, I can get something in here that can give me a buy. And then if I understand price, that if this has significance meaning in price, this turning point, then going forward, just as price was going down, this could be the beginning of what? Price going up. So I'll start looking at what I just showed you. This is the closing price. We want price to trade just below it, and then aggressive trade above it, and then I'm looking for longs. Okay, I think I've spent too much time on this, so you can rewatch this session, and then glean what you want to glean from it. Okay, moving on to the next one, and the last one. The last one that I wanted to share, I'll do in future, but I want to give it to you today. but in future I'll just record that because the closing price, I've recorded it on its own. The high probability area, I've done that, and then the daily bias, I've done that. So this one that I'm sharing now will be something that I will record it on its own. So if you want to watch it, then you can go and watch that on its own. Okay, it's the Tuesday and Thursday price action. Okay, I'm gonna be quick with this. Again, from my mentor and our mentor, Smart Money's everybody mentor, right? The mentor of your mentor from ICT. He talks about Tuesday and Thursdays, right? If the market is bullish, there's a 70% probability that it's gonna form the low on a Tuesday and form the high on Thursday. And then if the market is bearish, there's a 70% probability that the high will form between, okay, let me say it this way, between Monday, Tuesday. And if it's bearish, it will form between Monday and Tuesday, high, and then low forming Thursday. Okay, so from that understanding, what I did was, okay, that's interesting. So if I want to trade on Tuesday, on Thursday, what should I look for? Okay, so think again algorithmically. If there's a 70% chance that this is going to happen, why don't you look into it? Right? It's like me telling you, I'm going to give you some lotto numbers and there's a 80% chance you're going to win. Wouldn't you look into it? Of course, you're going to stake something. Even if it's not going to win, yes, you will probably take your chances, right? The same thing with what I'm showing you here. If there's a 70% probability that price is going to go up on a Tuesday when we're bullish, of course, I'm going to investigate it. So what I did was I went through price action and then I paid attention to Tuesdays when we are bullish, or when Thursdays when we are bullish. If price is going to go up and we want a low to form on Tuesday, what is it going to do? Definitely, it will have to trade below it will have to trade below Monday's low, right? Yes, because if it's going up, Monday will begin the week, right? So then Monday's low is going to be very important, because if the low is going to form 70% of the time on Tuesdays, then Monday's low is huge. So you wait for Monday to trade and then you highlight. So if you're bullish, you highlight Monday's high. If you're bearish, you highlight, if you're bullish, you highlight Monday's low. If you're bearish, you highlight Monday's high. And then you wait. In London session, look at what price is doing and then see, do we trade below the Monday's low and price reject? Because the idea is that low should form on Tuesday. So it should trade below the Monday's low. Okay. And then if it does it, that's your clue. The rejection, that's your clue. Again, you can blend the closing price on Monday to this as well. And that will be your clue that this is going to be the low of the week. And then you can buy retracement, maybe break of structure on the 15 minutes time frame or 1 hour retracement, or you can wait for London to play out and then New York session you come in and then you buy either an auto block or a fair value gap, something like that, OTE, and then you ride it. Now what I've given you doesn't sound sexy, but if you look into it, you'll see every single week. Just look at some pairs and then see for yourself. The same thing on the high side. If you're expecting price to go down, you highlight Monday's high and then you wait. Sometimes it can do it on a Wednesday. I know I'm going too deep and I don't have to, but I love you guys, so I'm going to. Sometimes it might not do it on Tuesday. I'm deviating a little bit from the Tuesday and Thursday, but bear with me because it's gonna make sense. Sometimes the high or low will form on Monday, right? But we are bullish and this low will not be taken. This low here will not be taken. Hint, Tuesday goes up. Okay, we are bullish. Okay, I'm giving you some ideas here. It can also do it on Monday. That's different. That's something different that I'll talk about in future. That is the using the Friday's price action, but we will talk about it. I know what you're asking. This is just specific for Tuesdays and Thursdays, but I'm giving this so that because I know some people, right, are so rigid that if you tell them it's like this, it has to be like this. They are not flexible. They are so rigid that it's like if you say A, it has to be A. No. Let's say you're bullish, right? And Monday, instead of price going down, it actually goes up. And then leaves that Monday's low. And then Tuesday goes up. Monday's low is still there. And you are bullish. And then Wednesday, you see big drop. And hint, that is that low trying to form for the week. They are going to come back for this Monday's low. It has to do that. Sometimes it will just keep going up. Okay. And you cannot do anything about it. But most of the time, if that Monday's low is there, there's a high probability that if there's news event, they're going to come for it. Especially, wink wink, if we do have FOMC on Wednesday evenings, or we have interest rate on Wednesday evenings on dollar index, or if we have something like NFP on Friday, they can leave that Monday high or low depending on where the market is going. So if it's going up and we have NFP for Friday and the market opens and Monday goes up, Tuesday goes up, Wednesday goes up, Thursday consolidate, right? Then on Friday, NFP comes, boom, it trades right down to that Monday's low and then rejects and comes back up again. Okay, so that Monday's low, the reason why ICT says is 70% because it's like when market opens for the week, right? Everybody is rushing because Monday is trading, people wants to get in. So if it goes down, chances are there are people that are wrong. If we are bullish, again, I want you to think. Okay? ICT likes saying that. I also like saying it. Think. Market closed bullish like this for the week. Okay. And there will be traders that probably would have missed that move. There will be traders that will still be in that move. And there will be traders that will be itching to get in when the market opens. Okay. So when it opens like this, there's a whole lot of sentiment, which is what I described. Either you did get in and you still have a position and you be fearful that price will come and stop you out, or you miss the move and you want to get in. Okay, so when the market opens, there's a bunch of people that will want to be in the market and it's going to be on Monday. So if I am the market maker, why don't I set a stage on Monday and then rip them out on Tuesday or Wednesday? Yeah, that's what it's all about. So if the Monday opens and it starts going down, what will that do for the buyers in the market? They're going to start panicking that, okay, maybe price might come back and stop us out, depending on where you bought it. Hence, Tuesday takes out Monday's low and then it goes back up. So anyone that actually sold short because they thought price was going to go down, they'll be out of the market. And then anyone that was fearful that the market was going to go back down, they will also potentially leave. That's why you don't trade on Mondays. There are times that you can trade on Mondays. That for sure. Should I say it? Should I say it? Yes, I'll say it. I love you guys, so I'll say it. If we do get a reversal on Thursdays, right? If we do get a reversal on Thursdays, you can trade on Mondays. Okay. If you do get a reversal on Thursdays, you can trade on Mondays. If you don't have any reversal on Thursdays, don't trade on Mondays, because the stage will not be set for a move. But if we do have a reversal on Thursday, then the stage is set for price to move because price has reversed. So you can trade on Monday, because Monday might just continue the stage that was set on Thursday and Friday. Okay. But if you don't have that, don't ever trade on Monday. Okay. Because if you do, there's a high probability you'll get it wrong. Okay. Take it from someone that has consistently got it wrong for a long period of time and then realizing it. Okay. So if we do have a reversal on Thursdays, you can trade on Monday. But if we don't have a reversal on Thursdays, don't trade on Monday. It's as simple as that. But here, price will then eventually do what? Take them out, either sellers and buyers, and then price will go up. So that Tuesday, you wait for price to go below the Monday's low, rejection, and then you buy for continuation. And then the same thing is inverse, right? If price closed bearish, wait for Monday to open, let it go up, wait, highlight the high and low, run, break. You're gonna wait for that break and then look for the sell. Okay. And then on Thursdays, what you're gonna be looking at is where price has traded to, right? The Thursday one, it does require a bit of experience. Let's say price went up into a gap, up to closing a gap on Thursday, or we traded to it on Thursday, and then on Thursday price rejects that and forms a swing high on the H4 with aggressive drop. What you eventually see is price will come back below Wednesday's high. So if this is Wednesday, this is Thursday, price opens, it goes up, and then it hits that, and then it comes back down aggressively and trade below Wednesday's high. When that happens, that to me is a sign that we formed the high of the week. What Friday might eventually do will be pull back and then drop. It might not continue dropping for the rest of the week, but it can give you a trade idea on Thursday. If you are very if you do more examples of what I'm showing you, it can give you a trade idea on that Thursday, or it can give you a trade idea on Friday. Okay. Let me show you an example of that Tuesday price action, because I think if I'm not mistaken, I think I did a trade on Tuesday on New Zealand CAD. And this is the example that I did not want to talk about. This is the Monday trading below Friday's low. That's something different. What I'm talking about right now is this one here. Okay, so this is Monday, right? Let's remove. Actually, I'll leave it there because those are my targets. This is Monday. This is Tuesday. Okay, so look at what happened on Tuesday. Monday high, Monday low. Tuesday opens, it trades down, takes out Monday's low, and then expand up. So if you go to the 1 hour time frame, this is where I got in. I still have that trade running, and I took another trade here today. I'm sorry, yesterday. Here. So that's Monday's low. That's Tuesday. So Monday, Tuesday, run, break of structure, pull back, buy, and then off we went. Okay, this thing happens not all the time, but when you have directional bias, if you are bullish, right, you can anticipate something like this. Right, for example, see how Monday traded. There was no reversal on Monday. So if you traded on Monday, there's a high probability you're going to get it wrong. Why? Because what did you do? Did you buy or you sold? Because if you sold, well, hello. And if you sold expecting price to go down, where did you expect price to go? And then if you bought, where did you buy? Because you didn't buy on Monday, unless you bought down here. Because if you bought here, you'd be taken out. Where are you going to place your stop loss? Okay, so in order to avoid all of that confusion, that's why you don't trade on Monday. And then you wait till Tuesday. Sometimes you will have to even wait till Wednesday. Right? So let me show you another example over here. Which I traded this one as well. This is Monday, right? This is the high. And this is the low. I'm sorry, this is the low. Okay. What did I say? On Monday, if we are bearish, have the high and the low. Tuesday is likely to go and take out the Monday high before we go lower. Tuesday didn't do it. What did Wednesday do? Wednesday went and attacked that. Ding ding, and then it went back down. So that formed the high of the week. Okay, so if we don't take it on Tuesday, then you have to consider it on Wednesday. If price forms the high on Monday and low on, sorry, it forms the high and low on Monday. If you are bearish, you want to see that, right? It's something that as a smart money trader, you want to see that. Okay, if you don't see that, there's a high probability that the market will manipulate back to that level before going down, especially if there is some news event. They will use that, and then as soon as that is tagged, you see price just drops down. Okay, this week or even yesterday, I was anticipating them to do something similar, which was this high here. That's Monday's high, and that's Monday's low. Okay, so as we placed in the high, I wanted to see them go up here, because that will obviously bring the sentiment that price is going up. So people will pile up on that, and then they'll go against them, just like they did here. Because as it was going up, there were a lot of interest in buys, and then they went against them. Okay, Let me see. I think there was another example. Let me go and find it. Here, that's Monday's high, that's Monday's low. That's Monday's low. Okay. Notice that if you look closely, we are bearish. That's Tuesday. Price did not do anything. And then Wednesday, price ran up. Went above Monday's high, spent some time, and then rejected. And then Thursday, boom, price comes right back down again. So if you went in thinking price was going to go down and you sold Monday, yes, depending on where you sold, you would have been, let's say, profitable up here. But if you sold down here, you would have been punished. Can you buy? Yes, you can, but there's no sign of buy. If you want to buy, obviously you want to see the run on Monday's low. So there's no run on Monday's low to buy for Tuesday. So it doesn't make sense buying on Tuesday. But it does make sense doing something on Wednesday, which is likelihood of price going above Monday's high. And then you want to sell above Monday's high. ICT teaches us the power of three. Ugh, man, behave yourself. The power of three: the open, manipulation, expansion, and then the close. So this just applied on the weekly. So if we open here, right, the opening price would be that Monday. That movement up can be Monday, Tuesday, but most importantly, Monday. Because if Monday trades up, it leaves that Monday high as a potential run to cause the high of the week, and then price will go down. Okay, let's go to Aussie here. That's Tuesday price action. That's Monday. You highlight the high and low of the week. I'm sorry, the high and low of Monday. Tuesday price takes that one out, and then rejection. Let's go to EJ. I almost wanted to sell up here, which is what I was looking for. Okay, because when price was here, I was like, come on, man, just take it and let me sell. But I didn't quite get there. But that's another Monday, Tuesday, Wednesday. It didn't quite get there, and then price went down. So I'm highly, suspicious about that. That's equal high. Let's go back in time. That's Monday's low. That's Monday's high. Tuesday, we did not attack it. Wednesday attacks that, and then down we went. Right? If you go through price, you're gonna see so many examples of what I'm showing you here, and then eventually it will start making sense that you don't have to trade Monday. Wait till Tuesday and then see what price action you get on Tuesday, and based on what you get on Tuesday, that can give you a huge insight, and then you can trade for the rest of the week. If you've been trading for a while, right, there's a high probability that most of the time, if you pay attention, unless you don't pay attention, if you pay attention to your losses, you will see that most of your losses are going to occur between Monday, Tuesday, and or Wednesday. Because when the weekly profile is playing out, it can manipulate and then eventually move in the direction that price is supposed to go. So if they manipulate to the upside when we are bearish, you might be in the buy, or you probably might sell too early. And that's where you get it wrong. Okay. So that's the Tuesday and Thursday's price action. I did not pay too much, or I did not talk too much about the Thursday because the Thursday is always subjective to where price is going to reach for. So when price gets there on that Thursday, then you can start looking into, okay, if this is a high probability level on the daily time frame. Say for example, we traded Monday up here. We traded Monday, Tuesday up here, Wednesday, and then Thursday hits this level. Okay. When that happens, then you can anticipate Thursday being a low of the week. Another example will be here. If Monday trade up, Tuesday, Wednesday, Thursday, we hit this level, then you can anticipate that being a low of the week. So the low and high of the week is going to be dependent on where price will hit during the course of the week. Is it high time frame level? If it is, that will be your low of the week. And then you can anticipate a reversal, not so much of a reversal, but you can anticipate something. You can anticipate a move that is tradable, basically, because what is happening is that we form the high, we form the low, and price is going to form the close. You don't know where the close is going to happen. So if it gives you what the Thursday price action does is, if we trade below Wednesday's low and then you see a break in market structure after going to hit a high time frame level and then we break market structure, then you can use that as a potential setup to buy and then just hold it to see how far it's going to go, because the weekly profile, if it does open, it goes up and goes down, the closing price is always going to be subjective, right? Especially if we hit a high time frame level. It can go all the way up and make even a new high for the week, right? So if you do get that price action and you break structure, just buy it and hold on to it and see where it's going to take you. So that's how you can use the Thursday price action. But for the Tuesday, if we are bearish or bullish, you wait Monday, let Monday trade, place your highs and lows, and then wait. All right. So that's all Tuesday and Thursday is all about. Very, very simple. It's a game of patience. All right, let me read your questions now. Do you think the high resistance setup doesn't prevent news event from? No. News doesn't care about high resistance. As a matter of fact, if there's high resistance and there's news, I would want to see price go above a high resistance and then reject. So if we do have like this and there's news, I want to see them go up here, because if they go up there, it's going to trigger a bigger drop. So yes, news doesn't care about high resistance. I would want to see them go above it or below it. Now the high resistance, it comes in so many ways. It's not always going to be a high here and a high here. It can be a single candle, right? This candle and that candle. That's also high resistance. So take that into consideration. Like this one, that's a high resistance. Like here, that's a high resistance. Here, that's a high resistance. Okay. So they could just pop above that high. You can see it maybe as just one single high, but in the true fact, it's a high because it went above high and then rejected. The next question, what's the name of the video on the opening price? It's the I think it's accumulation, manipulation, distribution. it's not a long video. It's about, I think, not more than 30 minutes. Accumulation, manipulation, distribution. Could you also use the weekly opening price whereby it trades back to 8 on Thursday? Could that be a sign of reversal? It depends on the level that price will hit, because if we trade back to it, it could be because they want to go for the Monday's low, right? It could be they want to go for the Monday's low. That's why they're coming back for the opening price. They want to go for the Monday's low and then reject and continue. There are some profiles that you can see. Monday will go up, Tuesday will go up, Wednesday will go up, and then Thursday will come right back down, take out Monday's low, and then go right back up again. So it depends on the location that will happen. It will happen probably in a let's say monthly level or weekly level. I used to have that problem of buying or selling too early. Yes. It's something that happens quite a lot. You just need to be conscious. You need to be aware. That's my newest language. Conscious. You have to be aware. You have to be aware of when you're taking those trades and when it's stopping you out. What day is it? That's when you know that, okay, there's something like that. Because I knew something like that is there, but it was just me not willing to sit on my hands on that Monday and Tuesday to wait for that high to form. So what I realized was Monday, Tuesday, if I'm not patient, that's where my losses is gonna come. And then by Wednesday, Thursday, Friday, I've broken even because I've made it back. Because after that, price makes sense to me. Because I'll be in the manipulation phase and then I'll get stopped out. And then I'll trade the expansion phase. So if we are bearish and it's going up, I sell too early. And then price will stop me out. And then by Wednesday, price is now expanding to the downside, and I'll sell and I'll be in profit because it makes sense to me, and then I'll break even. So it's just doing it over and over and over again. I was like, I'm tired of breaking even. Or sometimes even at the end of the week, I'll get it entirely wrong, but it will start with Monday and Tuesday. If I'm wrong Monday, Tuesday, sometimes it can just put you in that negative state of mind, and you just go on a spin. You want to make it back, and you end up losing more. All right. So that's it from me for today. I decided to do a session, and I've done it. I promised and I delivered. I'm living up to my words. I'm learning to be human. When you promise something, you make sure that you fulfill it. Okay, so yes, trading Tuesday, Wednesday, Thursdays is optimal. And then Friday, have fun. If you trade Tuesday, Wednesday, Thursday, Friday, have fun. What do I mean by fun? Go on a demo and then trade everything that you see on a demo for practice, just for fun, right? Because it's not going to hurt you. You know what you're doing. You just don't want to give away what you've made between Tuesdays and Thursday. So just have fun. If you see a 1 minute raid, take it. If you see a 1 minute auto block, take it. All right. So that's it from me, guys. I have to run. I don't know when I'm going to do one like this. Hopefully maybe Christmas, for a Christmas gift, I will do another one. But I hope you got something out of this one. If you didn't, maybe you didn't pay attention. But if you did, I gave a whole lot, more than I should have. So I'll see you again for the weekly forecast, and yeah, take it from there. Enjoy the rest